Welcome to the Deep Dive. We're here to give you the essentials on company earnings, cutting through the long calls.
Yeah, basically your audio shortcut. We pull out the key insights so you, the investor, can stay informed quickly.
And today, we're digging into the Q1 2025 report for Evolution AB. That's EVO on the NASDAQ Stockholm.
Right, the big B2B online casino provider, founded back in 2006, supplying games to over 800 operators. Huge team, too, over 22,000 people.
Based in Sweden, but they're everywhere. So our goal today, break down this Q1 report, get you the main takeaway.
Exactly. Look at the numbers, the CEO's comments, product stuff, the whole story.
Okay, let's jump right in then. The key financials. Q1 2025 versus Q1 last year. How did net revenues look?
Net revenues were up, but maybe not spectacularly. 3.9% increase, hitting EUR 520.9 million. That's up from 501.5 million.
Just under 4%.
But, and this is important, they mentioned the constant currency growth figure. Take out the FX swings, and it's more like 6.1%.
Oh, okay. So currency headwinds definitely dampened that reported number.
Interesting. Yeah, it gives you a slightly better sense of the sort of underlying operational growth.
Right. Now, what about profitability? Because that seemed, well, a bit different. EBITDA.
Yeah, EBITDA actually decreased slightly, down 1.1% to EUR 342.0 million. Last year it was 345.8 million.
And that impacts the margin, obviously.
Big time. The EBITDA margin fell from 69.0% to 65.6%. That's a noticeable drop.
And the bottom line, profit for the period?
Similar story there. Profit was down 5.4%, came in at EUR 254.7 million compared to 269.2 million a year ago.
So earnings per share would follow that trend too.
Yep. EPS before dilution dipped from EUR 1.27 down to EUR 1.24. So bit of pressure there.
Okay, so summing up the headlines, modest revenue growth, especially on constant currency, but clear pressure on margins and profit. What was the CEO's take on this?
Well, Martin Carlson, the CEO, he tackled that slower growth head on. He pointed to two main things.
Okay.
First, Asia. They'd implement some technical countermeasures, basically trying to stop illegal cyber activity.
Which sounds necessary, but probably disruptive.
Exactly. He said it directly impacted revenue generation there. Couldn't be helped, but it slowed things down.
Okay, that's Asia. What was the second factor?
Europe. He mentioned they took proactive, self-initiated steps to ring fence more regulated markets.
Ring fence. So preparing for upcoming rules or aligning with existing ones more strictly?
Seems like a bit of both. Preparing for the future, getting aligned. But he admitted it had, varying negative impacts on revenue. It depends on how well players actually move over to the official regulated channels.
Channelization. He talked about that, didn't he? Saying it's not all in their control.
Precisely. He stressed they're having good talks with regulators. They support regulation. But ultimately, getting players onto the regulated platforms depends on the rules the regulators set, not just Evolution offering the service.
Right. Depends on how attractive the regulated market is made for the players. Makes sense.
So these actions, while maybe causing some short-term pain, seem strategic for the long run.
So what's the outlook? Did he sound worried or?
No, more like realistic but optimistic for later in the year. He said Q1 profitability and maybe Q2s will likely be lower because of these actions.
But they expect a recovery.
Yeah, they anticipate a stronger second half. And importantly, they kept their full-year EBITDA margin guidance, still aiming for that 66% to 68% range.
That's a key point. Speaking to the guidance despite the Q1 dip.
And he doubled down on their core philosophy. Growth first, even if margins take a temporary hit, they're still investing.
Okay, let's shift gears to products. That's always huge for Evolution.
Absolutely. He called the 2025 roadmap their strongest ever. Over 110 new releases planned for the year.
Wow. Any Q1 highlights?
Yep, they launched Racetrack and War successfully in Q1.
And more recently, I think I saw some buzz.
You did. Marble Race, a big game show launch, that was early Q2. And Fireball Roulette literally launched the day the report came out.
Constant pipeline. What about the RNG side? The digital slots and table games?
That side's busy too. 17 new RNG games in Q1. He specifically called out No Limit City's Duck Hunters as a standout release. Seems like No Limit City is still a real powerhouse for them.
Any teasers for what's next?
Yeah, the big one they flagged is called Ice Fishing, coming this summer. Described as a game show unlike any other they've done.
Oh.
Sounds intriguing.
Trying to innovate beyond the standard formats. Interesting. Okay, let's break down performance. Live Casino first, still the engine room, right?
Very much so. It grew 4% year on year in Q1.
Okay.
which, is pretty decent given those headwinds we talked about, the ring fencing in Europe and the cyber stuff in Asia.
So underlying demand is still solid.
Seems that way. He mentioned solid potential in Europe and Asia despite the issues, plus strong performance in North America and good development in LATAM, especially the Colombian studio.
And LATAM seems poised for more, with Brazil regulating.
Definitely. They expect more activity there because of Brazil. And a really key metric, the share of revenue from regulated markets overall jumped to 45%.
Up from 39% last year. That's a significant shift.
It really is. Shows that strategic focus on regulated jurisdictions is paying off in terms of revenue mix, even if it causes some friction.
Okay, and the RNG portfolio overall, how did that segment do?
Overall, RNG growth was 3% year on year. Like we said, No Limit City is strong, but they also mentioned seeing potential to grow their other RNG brands too. So trying to broaden that strength.
And supporting all this requires physical presence, studio expansions.
Yep, busy quarter for that too. They opened their third studio in New Jersey and a second one in Romania.
More capacity in key markets.
Exactly. Plus, new studios planned for Brazil and the Philippines are on track for the second half of 25, and another one coming in Michigan, their second there, scheduled for the autumn.
So significant investment in footprint continues.
Definitely.
Now, there was also an update on Georgia following the labor issues last year.
Right. The Tbilisi studio is still running, but at reduced capacity. The key update was about an independent investigation into last year's strike done by a Big Four firm.
And the findings.
According to Evolution, the report backed up their earlier statements on things like salary levels, how many people actually participated in the strike, and the general workplace environment.
And they've shared this.
Yeah, shared it with unions and authorities. Evolution basically considers that whole episode a closed chapter now.
Okay. Let's talk about their people quickly. The team size is massive now. Over 22,000 employees globally. It's huge. They made a point about being a starting place for many young people's careers, offering development opportunities.
They gave that Michigan example, right?
Yeah, pretty striking. In Michigan, with about 1,000 staff, they said over 85% of supervisor and manager roles get filled by internal promotions.
Shows a focus on internal pathways. Okay, let's circle back to the financials for a bit more detail. Revenue by game type.
Sure. Live Casino brought in EUR 448.7 million. That was up from 431.3 million. RNG was EUR 72.3 million, up slightly from 70.1 million. So Live is still clearly dominant, around 86% of the mix.
And expenses. We know they went up. They did. Operating expenses hit EUR 217.5 million compared to 189.8 million last year. Main driver was higher personnel costs, more staff for new tables, general expansion. Other operating costs were up too.
Any currency impact on expenses?
A small negative one, about EUR 1.0 million. Not huge, but it contributed.
And how did this flow through to operating profit below the EBITDA line?
Operating profit decreased to EUR 303.4 million from 311.6 million. That pushed the operating margin down to 58.2% from 62.1%.
Okay. Any other financial items impacting the net profit?
Net financial swung negative. It was a negative EUR 1.2 million this quarter, whereas it was a positive EUR 5.9 million last year, mostly driven by interest and currency effects, and the tax rate ticked up slightly to 15.7%.
Still investing heavily too, right? Both in games and physical assets.
Absolutely. Intangible asset investments, mainly game development and platform stuff, were EUR 16.6 million. And investments in property, plant, and equipment studios, tables, IT gear, there was EUR 17.0 million. So continued spending to fuel growth.
How's the cash flow looking?
Actually, pretty strong from operations. Cash flow from operating activities increased significantly to EUR 361.3 million, up from 301.8 million.
Interesting, despite the profit dip.
Yeah, likely working capital movements helping there. Investing cash flow was negative 33.2 million, and financing was negative 159.2 million. A big chunk of that financing outflow was share buybacks, EUR 154.1 million spent on repurchasing shares.
And their cash position at the end of it all?
Still very healthy. Ended the quarter with EUR 969.2 million in cash and cash equivalents. Slightly down from last year, but still a huge buffer.
Okay, zooming out again, what's their view on the overall online casino market?
Still bullish. They expect continued strong growth globally. They point to things like better tech, faster internet, better devices, plus the ongoing shift from land-based gambling, and of course more markets regulating.
And mobile's just getting bigger and bigger, I assume.
For sure. Mobile devices accounted for 72% of the gross gaming revenue coming through their platform in Q1. That's up from 69% last year. So mobile optimization is absolutely critical.
And just to remind listeners, their model is B2B.
Correct. They supply the operators. The operators own the relationship with the end player. Evolution provides the games and platform.
Let's look at the regional revenue split again, just the numbers for Q1 25.
Sure. Europe was EUR 189.7 million. Asia was the largest at EUR 201.9 million. North America came in at EUR 71.5 million. LASM was EUR 36.2 million. And other regions made up EUR 21.6 million.
So Asia's still the biggest, despite the countermeasures impacting growth there. North America's showing strong growth.
Exactly. And LATAM growing steadily, too. Again, that overall share from regulated markets hitting 45% is a key trend across these regions.
Right, up from 39% a year ago. Okay, almost wrapped up. Any other key items from the report we should mention? Dividend.
Yes. The board is proposing a dividend of EUR 2.80 per share for the AGM. That's a total payout of about EUR 572.5 million. Represents just over 52% of net profit, so a significant return to shareholders.
And they were buying back shares, too.
They were. They kicked off a new repurchase program in February, up to EUR 500 million. In Q1, they bought back just over 2.1 million shares under that plan.
Important dates for investors to track.
The annual general meeting is coming up soon, May 9th, 2025. And the next report, the half-year results for January to June, that's due out on July 17th, 2025.
And one final note, an acquisition.
Yeah, a small note, note 5. Mentioned an agreement to acquire a company called Galaxy Gaming, Inc. It's expected to close in the second half of 2025, so it's not in these Q1 numbers yet. Something to keep an eye on later this year.
Okay, so let's try and summarize this deep dive into Evolution's Q1. We saw moderate revenue growth overall, kind of held back by those specific actions in Asia and Europe.
Right. Necessary actions, it seems, but they did cause a temporary dip in profitability. However, the company expects that to recover in the second half, and they're sticking to their full-year margin guidance.
And meanwhile, the product pipeline looks really strong, and they're continuing to invest heavily in studio expansion, particularly focusing on regulated markets.
Exactly. So for you, the investor, it's a picture of a company navigating some complexities. Cybersecurity, regulation, while still investing for the long term. The short-term profit took a slight hit, but the strategic direction seems clear.
Which leads us to our final thought for you to mull over. How do you weigh these short-term pressures, these strategic adjustments in key markets, against the potential for long-term sustainable growth in this really dynamic online gaming world? It's that classic balance, isn't it? Short-term headwinds versus the long-term vision. Something to think about when you're evaluating Evolution or any investment.
Absolutely. Thanks for joining us on this deep dive.